We've got Kush Bora as well as Parag Thakkar in our studios as we normally do at the start of the week. Gentlemen, very good morning to you and thanks so much for taking the time. We've got a lot of questions for you, but let's start as we usually do with the setup on the technical side. We saw a pretty sharp up move in the last half hour of trade on Friday. Does that mean anything at the start of the week? Does that give you any sign that we could possibly start off and move upwards?
To an extent, it does. But before that, I'm a little surprised that we aren't doing this show upside down. Hai ki nahi? The most common joke that you've got on the internet is the next time your food delivery guy comes, either bow or take your order upside down.
Like I was telling these guys, I'm practicing bowing. It works for the Japanese.
Okay, on a very serious note, this is not surprising. Yoga tells you that, these headstands help you a lot. And pretty much all the actors and models, they practice inversions on a very regular basis.
No, but did you note the real story in that whole post?
Which is?
Is that we are developing a device which will help you do this. He's also talking about that. So wait to see what is coming from continue.
So underlying theme to both, na? No. Just to come back to the market, what's happening here is last last week we saw all 5 days of gains, which is obviously a very healthy sign from a near-term perspective. But if I have to give you an overview, it's cautiously optimistic, more towards optimism than caution. The reason for caution, let me lay that out first. 126,100 has been a near-term resistance. We've hit that and then retraced a couple of times. Also, FIIs are again piling shorts. I think their short ratio is about 89% or so. So that's the concern. But from a near-term perspective, as you rightly said, Friday also we saw a very sharp uptick. Whatever be the reason, at least on the price front, we've closed positive and we've seen a good recovery. So all in all, as long as the 20-day moving average is protected on the Nifty, which comes at 25,750 thereabouts, you stay long on the Nifty, perhaps even buy on dips with a stop loss just below that. Bank Nifty, more interesting setup, third week of gains, but here to 58,500 is also a resistance from a technical standpoint, but options data also suggests that there is congestion. So this could be the pivotal level for the next week or so maybe. Again, similar view as the Nifty. As long as the 20-day moving average is protected, you stay long, you go long on the Bank Nifty for targets of 58,800 and 59,500. So all in all, the view is optimistic, mild caution because we're close to the resistance levels on both Nifty and the Bank Nifty.
Last earnings reactions today, but any individual stocks that look attractive to you?
Oh yeah, Monday weekly picks. So this week we've got Apar Industries. Very interesting setup, and the reason I say that is because the stock fell sharply at the start of this calendar year, and now it's retraced. And the resistance level for the retracement, that's 61.8%, that key retracement level, is at 89.35 after 16 weeks of consolidation. Apar Industries is closing above that, or rather closed above that on Friday. Volumes on the upside, very healthy. Near-term indicators also suggest 20-day and 50-day moving average conquered. So a positional bet on Apar Industries. Your targets are 94.80 and 9900. Stop loss at the 86.80 mark. And from a relatively shorter-term perspective, Varroc Engineering, very interesting setup. We discussed last week as well as a call. 665 and 685 are your targets. 635 is where you keep that stop loss.
And I think there is a commonality because the biggest talking point has been around Eternal over the weekend for completely different reasons.
Actually, he made it a point to say continue. Dipender Goyal made it a point to say that continue is not a part of Eternal. This is his own $25 million.
Yeah, but since they are
fund.
ubiquitous in some sense, right? You could kind of merge them in all forms of conversations. By the way, I quite like what they have done, independent of the commercial reasons. But by the reason I'm coming to you from the point of view what Somit pointed out as well, that if indeed one of those players is finding it potentially or possibly finding it difficult to raise the sum that they went out to raise at the valuations that they wanted, is there a negative for just that stock and positive for the others? Or is it negative for the space at large that it's only a 2 or 3 player market and one of them is finding it difficult to raise capital?
Yeah, so basically see, as we spoke last Monday, I think, my point of view is that if one company is building a war chest, just because one another company has raised money through private equity, that Zepto is of course not listed. So that's why, one company wants to create a war chest just to fight against that, so that they can also give to the customers for free, so this kind of fundraise, actually it doesn't. So I just thought by common sense that why should investors fund that? Why should equity investors give you money to create a war chest to fight against somebody? And so then this will continue. Everybody will give it for free. And so what is the economic sense in it? That is my entire point.
But so negative
I don't
only
have
for
anything
Swiggy?
against Swiggy, by the way.
No, negative only for Swiggy or negative for
No,
Eternal
if
as well?
Swiggy is not able to raise, definitely it is more positive for Eternal and Zepto.
Okay.
More positive for
Yeah,
Eternal.
absolutely.
Yeah, because they are not able to raise that war chest. But I want to come to you, Parag Bhai, on what you think about Q2. And there's an interesting BOFA note also that we will bring about, because we're at that phase where we can, wrap up and look back. And usually, I must say, within the team, there's a bit of a relief when the quarter ends, because it's a very hectic time
very
for
hectic.
a business channel.
Very hectic.
But this time, it's also a very positive
Yeah,
sentiment about the quarter. It's been good.
Super.
It's been nice to cover companies doing so well. Just your view on what the quarter
so
was
basically,
like.
see, I'll start with banks again. SBI was a fantastic quarter. Banks reported much better margins than expected. It was a 100 bips repo rate cut quarter. So banks did very well because of improved liquidity and because of their course correction which they took on the deposit repricing side. L&T record order inflow, 1,15,000 crore order inflow, and they are sitting on 6.67 lakh crore order book, which is the highest ever order book. So the third Mahindra and Escorts, both revising their tractor guidance upwards, which was a very big positive. I think they were at 5-6%, now they are 10-12%. So one of the component suppliers which is there in our portfolio disclaimer, which is Carraro India, they reported numbers, they reported 33% revenue growth and 44% PAT growth, right? So I would say the auto components, most of the auto component companies did very well. Tata Motors, I leave it aside, that is because of JLR issue and various other things. So I would say that it was a very good, of course cement was muted because of various reasons, because QOQ there was a margin price decline, plus there was a prolonged monsoon. But I would say that banking, L&T, Reliance retail growth, for example, Q2 16% retail growth, now Q3 is festive and GST cut led cheer. So I would say that all in all, if you read the signs, credit growth, the largest bank of India is revising credit growth upwards to 12 to 14%, and it is growing at a credit cost of just 39.39% on a 44 lakh crore loan book. That itself is a big thing, that itself is something which FIIs should understand now.
Okay.
And they should not remain 89% short.
FIIs, I think, are in their own world of pain or
because
whatever
it is AI and all, and India does not have AI play. So
but they're fed up of AI also right now. There's a question mark
that's
on
a
AI.
good thing. I think if it doesn't correct too much, money can come to India.
Okay, so
And trade deal is also close, I think.
Okay, so a lot on the horizon to look forward to. Just very quickly, what Bank of America is saying on Q2 earnings. They're saying earnings beat led by financials, healthcare and metals. Nifty earnings at a plus 7.1% year on year. Ex financials and energy at 5.9% year on year. For the NSE 200, it has been an uptick of 8.3% in terms of year on year growth and a 3% beat. Earnings cuts to moderate, growth to accelerate. They're overweight on rate sensitives, underweight on capex. They prefer large caps over small and mid caps as their earnings growth premium versus large caps has shrunk by 30%, while valuation premium has expanded. So a positive view coming in there from BOFA as well on the Q2 numbers. For Parag, I just want to come to, talk about Tata Motors PV just for a second. And the JLR disappointment was expected, but deeper maybe than what was penciled in. Do you think there's any silver lining, considering that the domestic passenger vehicle business has not done that badly? There are also tax implications because that stock is now, separated into two, commercial vehicles and passenger vehicles. What's the advice for people who have been holding Tata Motors before that split?
So I think so we don't hold it in our PMS. We have, as we have always said, from last so many shows, like in auto, we prefer Mahindra and Mahindra, TVS Motors kind of place. Auto OEMs, I would say, and of course Maruti at some point, definitely. Right now, I don't own Maruti, but we would definitely like to have Maruti. Tata Motors is a very, very complex play, very, very complex play. So I think JLR, if you see the numbers also, apart from the fact that there are tariff-related uncertainties and sentiments are down globally, so people are not buying luxury cars too much. But if you compare them with their peers also, BMWs of the world, and JLR is actually struggling. So I would hate to say this bit, but it's because it's a Tata Group company, and I have always made luckily huge alpha in Tata Group stocks. But there's one Tata Group's company which I would like to avoid because there are too many moving parts.
And it's a period of transition for them, is it not? They say JLR, but it's only Land Rover right now. Jaguar is going through that transition.
And for this kind of complexities, the market cap is also 1,44,000 crore, which is not very cheap. So I would say that it has a downside for sure in my.
And it's so close to a lot of people's hearts because during COVID, people bought it sub 100 and it went to where it did. And so there is also this tendency to defend your choice and say, okay, let me hold for a little longer.
People also, and everybody for that matter, not only retail guys, even we fund managers fall to this prey of seeing being anchored by the prices, right? So for example, if you have seen 1100 at 600, everybody, even I was, compelled, to buy because it was mouth-watering. But you have to see the realities, right? That the world is very difficult, and in this kind of world, to have, such a large business of JLR which is underperforming, it is tough.
So cut your weight. It's dead weight that you need to cut out right now if it's in your portfolio?
So basically, see, again, as I tell you, I have a soft corner for Tata Group stocks. I cannot tell you that if you have, you book your loss. But at least as a new buyer, I will not buy.
But let me ask you this, there's potential for further downside because I don't see when the turnaround will happen, Parag bhai.
Yeah, that's difficult. In JLR, though, it is clearly difficult.
And it's accounting for most of the
So the entire, first of all, the entire industry has to have a tailwind. And then JLR will hopefully come back.
So
it's a both problem, business cycle problem and company specific, product specific, I would say.
So bottom line is, if you are holding, then be prepared for further downside.
Unfortunately.
And don't get in if you haven't.
Unfortunately.
Okay.
Wow. That's Tata Motors and a complete dissection of what that stock could do. You heard all the arguments. The pre-open rates are just kicking in. So quickly just mark them before we get to yet another set of counters, by the way. In the Nifty 50, remember, the implied open was suggesting a start in the green, and we are likely seeing that. But the likes of Tata Motors, some of the other auto names, a lot of pharmaceutical names, and some result reactions. So watch out for Dr. Reddy's, watch out for Glenmark Pharma, watch out for Brain Bees, V2 Retail, a clutch of names will be in focus.
Transformers and rectifiers, another stock that we've spoken about extensively over the course of the last week. In case you missed it, there was a World Bank order that debarred them on account of certain allegations, and that was rolled back on Friday. Both times the company spoke to NDTV Profit. You can find those conversations on YouTube. Narana Healthcare reacting to numbers as well, up about 5%, one of the top gainers. IRB Infra, Jubilant Pharmova, Max Health, interestingly, despite a miss on consensus estimates, is up and about over 3% at this point and doing particularly well. There are a couple of stocks on the flip side also that are not doing particularly well, and some of them reacting to fundamental updates. But it's Exide, for example, that's moving on the downside about 3%. Any of these stocks that you would keep on your radar on the technical side?
So, see, as far as Exide is concerned, this stock's been a shorting candidate for a while, continues to remain. So, 200-day moving average, it's dearly trying to hold on to that, but still trading below that. So, from a shorting perspective, I think Exide is still a good candidate. The 200-day moving average comes at 381, maybe close to 385 is where you can keep that stop loss and, continue to go short. Ahluwalia Contracts is showing a big spike. So after this spike, from a very near-term perspective, does it remain a buy? Not sure, but if it does sustain and close above, the 200-day moving average, which is the 900 mark, then I think from a risk-reward perspective, this becomes a very interesting buy. Also, Siemens was mentioned. While Siemens itself really not doing anything, consolidating with a very slow and a very gradual upward sloping move, I think Cummins and L&T from that space is something that you should have on your radar. Both stocks doing very well. Momentum also there, and I think they will perhaps get a fundamental stamp as well from Parag Bhai. At least L&T I know does.
Okay, what else? A clutch of stocks, as we said, flying around, but a few stocks on which there are some negative news as well, and we'll get to all of those. But it's 9:05, that time of the show, when we get you the big brokerage call for the day. Remember, there are tons of them today, by the way. But Sharad has chosen the Jefferies note on Torrent Power, I believe. Sharad, good morning. Why this particular note? What does the note detail?
Good morning, Neeraj. This is an initiating report, and there's a target price set at 1,485 rupees. Now, interestingly, they have stated that this company is a niche player when it comes to power distribution and generational play. Now, the company is having two businesses, And this is, of course, having a higher ROE than peers, and a steady growth numbers also company has reported. Relatively, the debt levels also for an asset-heavy business like this is on the lower side. 60% of the EBITDA is from the distribution business, and 8% CAGR growth is coming in with a 16% ROE. And even the generation, if you see, that's also up almost 1.6 times. The net debt ratio, that's also looking like below the 1% mark, and the 1.5 times EBITDA jump and ROE at a blended level at 12 to 13% augurs well for the numbers over the next 4 odd years. So this is an important report coming in for Torrent Power.
Okay, the stock about 1.5% up as well in trade. As Torrent Power is in focus. A few others, let's just look at what's happening to them. I want to see if the GAIL MGL duo is facing any issues, because this huge interruption which is happening in Mumbai, at least for MGL, not much, 0.25% down right now in trade. Brainbees, let's look at what First Cry is doing. Better than expected quarter for Brainbees that has been reported, muted on the stock. What's really buzzing is an IRB Infra, even a GMR Airports, decent set of numbers. Anant Raj in focus. So the Andhra Pradesh government has announced a slew of orders, and Anant Raj has some of them as well. Good notes coming in on Marico, and I think Marico, which is the reason you're seeing Marico in focus as well at about 2% up. If there was, and Parag, I'm coming to you with this question, if there was a consumption play that you wanted to continue as a GST cut theme and consumption improving theme, and if you look at Q2, that's the overarching sort of story there.
It will further strengthen only.
It will further strengthen. What are the candidates if you want to see a further strengthening and want to, be on that ride?
So basically, as I discussed earlier, on the consumption side, we have HUL in our portfolio. Marico is also one of them. Marico, Dabur. On the FMCG side, these 3 names. Of course, Nestle is also good, but we don't have it in the portfolio. And LG Electronics reported bad numbers, but I think it was expected. Stock had reacted a little bit, but I think any dip in that stock is a buying opportunity as a structural play.
Okay. I wonder if Aurobindo Pharma as well as Dr. Reddy's and Divi's are reacting to the news flow surrounding them. Well, maybe not too much, but here's the news flow around them, right? So in Aurobindo's case, the arm has received 9 observations from the US FDA for its Rajasthan manufacturing unit. Divi's, though, the company's Telangana unit underwent a US FDA inspection from November 10 to 14th, concluded with no Form 483 observations. Dr. Reddy's 2 AP unit completed the US FDA inspection, ending with 0 observations. So in some cases, actually the news flow is rather positive. Alembic has received the US FDA approval for a blood pressure drug as well. So 3 or 4 names out there. Alembic seems to be the one that is flying off the charts immediately. Kush Bora, from a trade perspective, Alembic, Reddy's, Aurobindo, any of them on the charts?
So incidentally, Aurobindo is something that I know I have on my radar still. It was a call last week, target 1, target 2, both hit solid momentum, solid volumes. Now, if on this news, perhaps, if there is a profit booking, I think that'll be a very interesting entry point, close to the 1175, 1180 zone. If there is a dip, the risk reward ratio becomes extremely favorable, and from there on, the momentum could well continue. So that's Aurobindo Pharma. But as a continued momentum trade, Dr. Reddy's 200-day moving average conquered, 20-day moving average also conquered. You're seeing a bit of a gap up start. I think if this continues, I think on the upside, you've got resistances at 1285 and 1315. Those should be your targets. And on the downside, you've got support at about 1225. That should be your stop loss. So Dr. Reddy's has a momentum trade, Aurobindo Pharma has a buy on declines setup.
We haven't spoken about, and so important points that you're making on those stocks, but we haven't spoken about, Parag bhai, the travel and tourism space in a bit. And interestingly, today you have an update for Indian hotels. It's not moving too much, about 0.6% acquisition in that holistic wellness space. Did you like that update? Do you like any other stocks in this space?
So if there's any one stock which I'll buy in hospitality and travel and tourism space is Indian Hotels.
Okay.
I don't have it right in my portfolio. As you were saying, Tata Motors was available below 100 rupees during COVID. Indian Hotel was also available at 75 rupees during COVID. That time I bought it, luckily. But as of now, I'm evaluating it for sure.
Okay. None of the others though. Travel, for example?
No, so basically I would stick to, as I said, I have a very soft corner for Tata Group. So if I cannot buy Tata Motors, I'll surely buy Indian Hotels.
Okay.
So
It's a simple story.
It's a simple and straight story. IRB Infra, the numbers were not as good as, say, a Chalet. Just in that. IRB Infra, just want to pull up IRB Infra very quickly in focus. They bagged a 9,000 crore order, 9,270 crore order from National Highways Authority. That stock is one of the top gainers in the pre-open session at least. Pre-open session is now closed. About nearly 5% in trade. We were talking a little while ago about Marico. I just want to quickly take you through what Goldman Sachs is saying on Marico. They've maintained a buy and hiked the target price with an 830 rupee TP target price actually. They're saying it's a consistent performer poised for acceleration in second half. Strong broad-based volume growth significantly ahead of sector average. Moderation in foods growth is likely transient and should recover by Q4. They see an acceleration in EBITDA growth in the second half, which should further improve in FY27. Kush, Marico, Indian Hotels, IRB Infra. Let's talk about some of the movers this morning.
So Marico, I think, had a good move. In the sense the opening itself is suggesting a good move, but it's placing it at the resistance mark. I would prefer Dabur over Marico given the current setup and the kind of up move that Dabur is showing. Indian Hotels, not as excited technically, at least from a near-term perspective. There's definitely recovery underway, but I would prefer it on slightly more elevated levels, which is 730, because that's where the 20-day moving average comes in. Then you've got the first litmus test that gets cleared. So above 730, maybe Indian Hotels makes sense. Right now, I would hold my horses. So yes, Dabur over Marico and Indian Hotels above the 730 mark.
And IRB Infra was the third.
IRB Infra has had a big spike. So I would again wait up because 45 is a resistance level that the stocks faced for the last 3.5 months. So if it sustains above 45 for the initial half an hour or so, and you don't see that supply pressure coming in, then yes, then the next levels is next levels are 46.50 and about 47.50. So that momentum could well continue, but I wanted to sustain above the 45 mark, which has been a resistance for about 15 to 30 minutes.
Parag bhai, you spoke about financials, and I don't want to ask you because investors tend to also gravitate to the smaller lenders, where you've seen a few pockets of pain, right? Utkarsh Small Finance Bank is a company that has over 5% GNP at this point. You have a few others in the space, and I wonder how it's down about 1.8%. Would you stay away? Because you talked about the largest bank.
So basically in small financials, City Union Bank, Federal Bank and DCB are the stocks which we own in the portfolio, and we continue to like them. They are doing extremely well. Some of them are, people don't realize. People just, when it comes to gold loans, people just feel that Muthoot and Manappuram only do that business. I'll tell you, City Union Bank, 29% of the loan book is gold loan. Federal Bank, 13% of the loan book is gold loan.
CSB also.
Yeah. So I'm saying that, and all these banks are very conservative banks. So they have not lended to microfinance or, in a big way. So they don't have this kind of stress.
So for you, low credit cost, high credit growth, good NIMs.
So good. So let me tell you, SBI, HDFC Bank, ICICI in the large cap, Axis of course, in four large caps, and then these three regional banks.
Glenmark Pharma showing signs of pain. And we talked about how the numbers were optically good, but not really. Yeah. Is there a buy on Glenmark Pharma, Kush, on the charts? If at all you have lower levels coming in, or you'll avoid?
No. I'll avoid. Multiple attempts at a breakout have failed and fizzled out. So I would avoid Glenmark Pharma for now.
I think more than any stock impact, this is people in Mumbai are going to be stuck, in terms of transportation. I heard of someone whose wood-fired pizza could not be made as a result. So
who is this someone?
This is something I just heard in passing. So, you have all kinds of impact. First world problems, I tell you.
You shake your head at these things, don't you?
Let's get back to markets.
So GAIL and MGL, not really in focus because of the gas shortage, but as far as markets are concerned, what I'm finding surprising is the kind of weakness we're seeing in HDFC Bank. I'm just wondering if you have any of these major, large private banks which show some buying opportunities, what would be on your list right now?
Tamanna, I'm so glad you brought this question up, because typically what happens is when the FIIs are selling, one of the sectors that gets depressed, so to speak, is the banking space, right? And that could limit the upsides on the bank Nifty. Now, that is the traditional theory, but that's been turned on its head with the kind of buying that the PSU pack has seen, and, with the kind of buying the DIIs have been doing just to outpace the FIIs. So I think I would still hold my horses from a momentum trade perspective on the large caps, for large cap private banks, which is HDFC and ICICI alike. If you have a medium to a long-term outlook, outlook, this is a good consolidation zone, and you should accumulate these stocks at these levels. But if you want a pure momentum play in the banking space, I would suggest you still stick to the PSU pack, where SBI obviously leads the way, but then you've got the likes of Canara Bank and PNB, which still continue to perform well. So any kind of declines in some of these names should be taken as a buying opportunity. So momentum trade, the PSU pack from a medium to a long-term perspective, positional play, HDFC, ICICI, still look good. It's just that you perhaps won't get an immediate uptick on some of these.
On the earnings, stock from the broader markets doing particularly well. SKF, it may not have moved in the early few ticks, but it's now one of the top gainers on the Nifty 500, 9% up, and EBITDA growth of 34% on a year-on-year basis in the second quarter. Certainly doing a favor to the stock price at this moment. Apollo Tyre is another stock that was up and about. No major trigger really, but it was up about 3%. It's now 2.8%. The question that I have for Kush is this a durable upside that you're seeing? Would you buy into it?
In fact, the entire tire space has had a terrific run in the last month and a half. JK Tyre is something that we identified, discussed on the channel as well multiple times, and the first time we discussed it was close to the 395-400 mark. Look at the run on that, right? So Apollo, JK, all of them are in a near-term, bullish uptrend. Any kind of decline should be taken as an opportunity. The reason I say declines is because now both of them are starting to hit those resistance levels. Look at Apollo. Last 3 sessions, including today so far, 540 has been that resistance mark from where it's seen some profit booking. Even JK Tyre for that matter, 480, 475, some profit booking coming in. So perhaps there will be some profit booking after this massive run, but any drop of about 3 to 5% should be taken as an opportunity to go long on the tire space, JK and Apollo in particular.
Okay. By the way, the PSU banking pack doing particularly well in trade today, up over 1%. On that note, gentlemen, thank you so much for taking the time, and pleasure speaking with you as always.